All right, so our next panel will be led by Janice Musselwhite, one of my colleagues, a Duke graduate, and a wonderful company that's locally here, and you'll hear a lot of good stuff similar to what we heard from Tom Gamer. So please join Janice and her team on stage now.
Thanks so much, Mac, and thank you so much to everybody for joining us today. My name is Janice Musselwhite, as Mac said. We're going to be talking today about Lindsay Corporation. Lindsay is a leading global manufacturer and distributor of irrigation and infrastructure equipment and technology. The company was established in 1955 and has been at the forefront of research and development of innovative solutions to meet the food, fuel, fiber, and transportation needs of the world's rapidly growing population. The Lindsay family of irrigation brands includes several different brands focused on center, pivot, and lateral move agricultural irrigation systems, as well as various technology management systems and other Internet of Things solutions. The company is also a global leader in the transportation industry and has equipment to improve road safety and keep traffic moving, including the road zipper, which we'll talk about later. The company has roughly 11 million shares outstanding, closed last night just under $120 a share for a market cap of $1.3 billion. Less net debt of about $35 million. That leaves you with an enterprise value of $1.3 billion. So I'm joined here with me today by Randy Wood, President and CEO. Randy has been with the company since 2008 and has had previous roles including COO and various other senior roles in marketing and operating in the business. He has spent his entire career in the agriculture industry. Brian Ketcham is Senior Vice President and CFO. He joined the company in 2016, and he previously held various finance roles at Valmont Industries, another company in the area. So with that, maybe we'll start with a couple of questions, and then we can go out to the audience and get some of your questions as well. So just to kick us off today, can you talk a little bit about some of the significant trends in place to drive irrigation product demand globally?
Yeah, I can start with that one, and good morning, everybody. Thanks for having us. In our business, it's really important, and maybe in ag in general, to look at both the short term and the long term. And for us, we've also got to look at mature markets like the US, Canada, Western Europe, Australia, New Zealand, and the more developing or project-oriented markets. And in the short term, if you follow any of the ag stocks or the ag industry in general, we've certainly seen some stability recently in commodity prices, but we will see 2 straight years of net farm income decline. And if your customers make less money, it's logical to assume they might invest or spend less money. So in those mature markets in the short term, we have seen a little bit of that headwind in the ag industry. When we look at the project-oriented markets externally, and then this is really going to be the Middle East, North Africa, Central Asia, those countries really don't care if corn is $3.50 or $7.50. They're investing to preserve food security, to grow their ability to feed their own populations, and we really saw that accelerate during the pandemic when borders closed. We also see a lot of countries, particularly in Central Asia, they want to diversify their GDP away from being largely petroleum-based to also becoming agricultural-based, giving them export capabilities, access to U.S. currency. So I think in the short term, we do see a bit of a headwind, maybe in those mature markets where farmer sentiment is impacted by profitability, but those project-oriented markets are tougher to predict, they're lumpier, more reliant on credit, and where they fall is tougher to predict. But we do see, I think, some great short-term tailwinds in those areas. When we look longer term, really in our space, we're about feeding people, we're about generating fuel, we're about keeping roadways safe. So when you look at those secular drivers connected to population growth in particular, we're really uniquely positioned to help feed a growing world. And if you look at some of the UN data, we've got to grow 70% more food by 2050 to feed a growing population. Irrigated ground globally represents 20% of the acres, but it produces 40% of the food. So if we're going to continue to expand food production, we know that irrigation is going to play an important part of that. So we do like the long-term secular drivers for our company and for our industry.
Excellent. Great. Let's see. We talked a little bit about this already, but if there's anything that that you wanted to add, kind of talked a little bit on higher level here. We're all well aware, of some of the macro challenges today, including wars and global logistics for agricultural products. Digging into your global businesses, can you provide an update on some of those regions, which you spoke to a little bit, and what you're seeing in terms of demand and effects on supplying some of those regions?
Yeah, I think one of the most interesting markets to maybe talk a little more granularly about is Brazil. And Brazil's been becoming a growing ag powerhouse. And we've had a lot of interest from Brazil recently here in Omaha. Governments from Paraná, from Mato Grosso, from Sao Paulo, and governors of those provinces, ag directors from those provinces, states coming to visit to learn about how Nebraska grew their irrigated agricultural base. And a state like Mato Grosso is a great example. If they were a country, they would be the #3 producer of soybeans in the world. That's how big and important they are to Brazilian and global agriculture. They've got just under 30 million acres of productive ground. 1.5% of that is irrigated. So their opportunity to continue growing more food, expanding production without having to go into the Amazon and bring new acres into cultivation, their ability to grow more food is going to be directly correlated to their ability to irrigate. So we're seeing a lot of interest in that country, and that state in particular is one that we're really excited about because they want to do it the right way. They want to start with the best technology, the most efficient technologies, so that they can serve resources while they're also growing more food for a growing population. So those types of markets and projects, in our view, both short-term, long-term, get us pretty excited.
Excellent. That's great. Shifting gears a little bit, could you comment on weather volatility? Has that changed over the years, and how does that come into play with your business?
I might have a recency bias, and I guess thoughts and prayers with anyone locally impacted by the tornadoes that kind of tore through this region last week. So yeah, it seems like weather's been a lot more volatile in the last 7 days. But again, recent memory, when you look at the impact of El Nino and droughts in Brazil, droughts in parts of the US, droughts in parts of Europe, it does seem like we can't predict weather as directly as we have historically. And that uncertainty, in my view, does become a positive driver for our business. And if you think about a farmer, when they plant a crop, they've rented the ground, they've bought the tractors, they're making payments on their combines, they've contracted fuel, they bought seed and fertilizer. All that money is sunk cost on that acre of ground, and their hope is that it grows all season long, and they come in the fall, they harvest it, and they sell it. So it's really like work in process inventory between the time they plant it, the time they harvest it. And if your greatest risk is it might not rain, and if I don't get the right amount of rain at just the right time, I'm not going to maximize that yield, maximize my return, my paycheck. That's a risk that a lot of customers are uncomfortable accepting, and that becomes a positive demand driver for our business. And as markets like Iowa, Indiana, Illinois, some of those eastern Corn Belt markets, if you had 1 in 10 years where it didn't rain quite enough, you might go by, you might get by. You might not be willing to make an irrigation investment. But if that becomes 1 in 5, 1 in 4 years, I think the dynamics change a lot. So that market uncertainty, the predictability of precipitation in particular, does become a positive driver for us.
Great. That's very interesting. Technology development has been a strength for Lindsay in terms of differentiation. Can you please talk about some progress you've made over the last year with respect to innovation? Anything that you would highlight for the future, and how AI might play into future productivity, and what sorts of questions you're getting from clients around AI.
Sure. I can start on that one, and then Randy can add to it. But when we look at technology, we look at stacking additional technology on existing capabilities, and we talk about our FieldNet platform, and that's been around for 20 years, and that's really about remote monitoring and control of these assets, these systems out in the field. And in the old days before that technology, if you had an irrigation system, you would have to go and actually press start on the control panel, and then you might go back sometime during the day or during the night, make sure it was still running, and then 24 hours later, maybe go back and push stop to start or to stop the machine. Well, now, all of that is in the power of, your smartphone or iPad, and so we've got customers that are managing hundreds of machines, and they're able to do it with relatively small staff. Because in a lot of places, particularly in the US, I mean, labor availability is becoming more and more of a challenge, especially, you know, finding labor that wants to work on farms. So that was a real game changer, having that remote monitoring and control of this systems. Like I said, it's been around 20 years, and we estimate in the US a little bit more than 50% of the installed base of center pivots have that sort of technology on it. So there's still, you know, an additional 50% market penetration in the US that's available. Outside of the US, the adoption is much less. Earlier innings of that technology adoption. The next layer of technology that we introduced 4 or 5 years ago is what we call FieldNet Advisor, and that really gets into irrigation scheduling. The precision application of water takes into account the soil type of the field that's planted, the genetics of the seed that's planted, incorporates weather data, the forecasted weather. If there's forecasted to be rain, you know, you're not going to have to irrigate. But that technology, using artificial intelligence algorithms, provides a daily recommendation to growers on when they should water, how much they should water, and in what part of the field, because there are certain areas of the field that, you know, the water application would be just wasted if you just put it out there uniformly. So what that technology has proven is that it can improve yields because you're only watering when the plant needs it or right before it needs it, and it also reduces water consumption and energy usage. So we think that technology, and again, that one's in the early innings of adoption, but when you look at globally the constraints that we have on water, and ag uses 70% of the world's fresh water. Randy talked about how we're going to have to continue to grow more food and fiber, but we also have to do that using less water, and so that really plays into our technology. So we're looking at, you know, as we develop our technology, it's all done internally. What can we do to help the farmer, whether it's you know, reduce operating expenses, improve yields, make their lives easier? We do a lot of voice of the customer research as we develop the technology.
I think just a couple of additions to emphasize what Brian shared with you. If you visualize this room, if you look around, all of these round tables look a whole lot like an acreage full of center pivots. So it's pretty from up here. But if you think about, you know, Brian's comment on how this used to be managed in the old days, just assume this is our home base, we're at home, and I'm farming. There's probably 50 tables in this field, which would be a good sized farmer, not the biggest, not the smallest. But if I was farming these 50 circles, these 50 fields without FieldNet, I would have to drive over there in the morning and push start. Then I'd have to drive over there and push start, put there and push start, and they'd run for 24 hours, so I'd have to drive out there and push stop. And when I got there, I hoped like heck that thing didn't get a flat tire or blew a gearbox or a sprinkler at some time during the middle of the night, because now I've only irrigated a quarter of the field instead of the whole thing. That was life as an irrigator. And you can imagine how many people you needed to manually manage and monitor all of these fields. Today, one person would manage these 50 fields because he's got it in his pocket. And he starts it from his pocket, he stops it from his pocket. If there's a problem in the middle of the night, text message to me or a service resource, maybe my dealer, saying, hey, you know what, your machine just stopped, you better go and fix it, so it keeps irrigating. So that experience from a customer perspective is very different than it was in the old days. That same level of technology now is being deployed to address when I water and how much I water, and this is a great testimony, I think, to how the technology changes profitability and efficiency and sustainability for our customers. So when we do field trials on FieldNet Advisor, when we're trying to convince a customer, give it a try, we'll take 2 fields. Just assume these 2 tables here are 2 fields. They're Pioneer yellow corn. They're planted on the same day. They got the same soil type, same topography. They're as identical as they can be. And we say, okay, you manage water on this one, just like you always have, and we'll apply the artificial intelligence to manage water on this field, and we'll see what happens. And in a way, our customers are incredible stewards of the land. They want to be efficient. They want to pass these farms down to their children. They're good stewards of the land. But if you think about the choice between, do I irrigate just a little more than I think I need, or a little less than I think I need, the bias is, I got the water, I'll put a little more, just in case. I don't want to have any drought impacts. So what we find when we do these studies, we get to the end of the year, And the AI field has used 17% minimum, 17% less water, 17% less energy. And we also see the yield bump that Brian mentioned, because sometimes it's about the timeliness. That crop needs a certain amount of water at each growth stage. As it shoots a stalk, as the kernels develop on that cob, it needs a certain amount of water at an exact time. Our models know that. And it tells the customer, you need 3 millimeters of water today. It's not going to rain. There's no rain in the forecast, so if you don't apply it through the pivot, your crop is going to be in stress. So that type of artificial intelligence can change the way customers operate for the benefit of their bottom line and the benefit of the environment. That's a pretty good combination.
That's great.
From a Lindsay perspective, that technology it's subscription-based. So the FieldNet would be a base subscription, FieldNet Advisor would be an add-on subscription. So what we're building is a growing recurring revenue base that, we think over time will have a pretty significant impact on our margin profile, but also, the technology is really cycle-proof. Once you have the technology, you're not going to take it off. So if, corn prices drop or go up, that's kind of adds a layer of stability into the revenue profile.
That's great. Yep. Thanks for highlighting those, very impressive efficiency gains, huge value add for your clients. So that's really helpful. Now I think I'll take a quick pause just to see if there are any questions from the audience at this point that we can answer. I think my colleagues will be
One right up front here.
walking around with microphones. We got one right up here.
Here's a mic.
Technology sounds really interesting. What is the payback for the farmer? How quickly are they going to get their money back so that they would consider this investment?
Sure.
And second, is there a minimal size or a critical mass that they must have in order to make this? So I'm assuming it's a pretty substantial investment and then continuing an investment.
Yeah, that payback is something that we track very closely because it's a big part of the investment decision that our customers make. And there's a lot of variability depending on, is it going to rain? And if you have one season in central Illinois where you spent all that money to plant the crop and it doesn't rain at the right time, your payback's 1 year. It's literally that quick. But on average, when we look at yield enhancement available across the country, around the world, we would say the payback is in that 2 to 3 year period for the machine itself, for the big machine. The technology itself, we've talked a lot about pricing strategy, and right now we'd say we're priced for penetration. We want to make it easy for customers to get on board. 97% renewal rate, growth in annual recurring revenue. We want to at least get them started and get them started on our equipment as opposed to a competitive platform. So in that case, the 17% water and energy savings that I talked about earlier, that's $35, $36 an acre for the customer. That subscription with FieldNet and the irrigation scheduling is less than $1,000 a year. So you take 100 acres times 35, that's $3,500 in savings, and you put a third of that back in, your payback's a third of a year. So the payback on the digital platforms is incredibly rapid, and that's a big part of the reasons. And Brian said it's cycle proof. Once you get on FieldNet Advisor, you can't give it back because you can't farm without it. When it comes to scale, we do see, for our machine, if it's a quarter mile long, that's a traditional Midwest machine. That's going to be 7 towers. That's going to be where you're most efficient. We do have a lot of corners and smaller fields where you might put 1 or 2 towers, and the payback on that might be a little longer, but the payback is certainly there. When you get into small and irregular shaped fields, and sometimes you see those might be more permanent crops or berries, grapes, some of those types of fields, those aren't ideal applications for us. We're going to be more of a broad acreage, but we have farmers, customers that have tens of thousands of acres, and we have customers that have a couple dozen acres. We can fit and scale into both of those.
Very interesting, thank you. So I'm interested in, we're decarbonizing, we're spending a lot of time thinking about carbon, and water efficiency I think is going to be super important.
Yeah.
And that farmer you talked about is an internal calculation about what it might be worth to save that gallon of water to that person. But the city downriver, downstream, that gallon of water might actually be worth a lot more. And so I'm thinking about new markets kind of in parallel to what we see with decarbonization around saving that gallon of water. So you have a city or a third party that begins to say, hey, we want to see more investment in the technologies you're talking about.
Yeah, I think decarbonization in ag is a very, very hot topic in animal production, crop production. We look at our role in decarbonization as probably more around energy consumption. And it can take a tremendous amount of energy to move water. It's a very dense product. So whether you're pumping from underground, whether you're building a canal network with booster pumps, and that's really why the tools like FieldNet Advisor, if we can eliminate 17% of the energy used to irrigate, it's going to have a significant impact to our customers. How we monetize that and allow them to create a credit system, I think there's a lot of TBD work in the space, but we certainly know we're in a very unique position to play a very important role. And this will be important for our installed base of machines and customers that we have today. But when we talk about expansion in Brazil, and I mentioned Mato Grosso, they don't want to start with inefficient flood irrigation. They don't want to start with high pressure, inefficient sprinkler irrigation. They want the best technology on day zero. And their investment philosophy is going to be inclusive of every piece of technology that can improve efficiency. And the other thing with Brazil is once we induce more productivity in the acres they have, they're not going to go into the Amazon. They're not going to go into the Cerrado to take those acres on because they can produce more with the acres they've already developed. So we can contribute in a few different ways.
That's what I was going to ask you. You usually talk about Brazil at the meeting, and I was just wondering what you think about Ukraine, Brazil, Argentina. Can you speak a little bit about geography? Usually you do. About or how they feed the world, and do you see Brazil still winning in that?
Yeah. I think in the near term, Brazil has more stability than some of the other growth markets. I think Russia, Ukraine is another part of the world where even though they only grow one crop, Brazil can grow 3 crops if they irrigate, so that's a very unique tropical environment and profile. Russia, Ukraine has some of the best soil, some of the best access to water, a political situation that's unfortunate, obviously, and Brian and I have both had the opportunity to travel together in Ukraine and see some of the infrastructure that they have there that's not producing anything now. Their big pump stations, their canal, their ways they distribute the water were world class. Some of those dams and pump stations now have been blown up, damaged. The good news is on the other side of the conflict, our view is there's going to be a tremendous rebuilding effort there, and we need Ukraine to produce grain for a growing world. We need Russia to produce and distribute grain for a growing population, particularly in Africa. So we see those markets coming back, being extremely relevant for the industry, and for us, it's just a matter of time. Anything you'd add, Brian?
So now, why don't we shift gears and talk just a little bit about the global transportation business at Lindsay. So, you know, the U.S. has been investing a great amount of money into infrastructure, including in road construction. Can you break down some of the benefits from this fiscal spending on your road solutions?
Yeah, I'll take that. So for us, infrastructure is really road safety products like crash cushions along the side of roadways, and then we have our unique road zipper offering. But you know, when you look at infrastructure spending around the world, particularly as it relates to roads and bridges, it's really dependent on government spending. You have some private money involved in certain places, and we all know that, you know, there's never enough money to go along. We've underinvested in infrastructure in the U.S. and a lot of other places. So any new money coming in is a positive, and so we have the Infrastructure Investment and Jobs Act that was passed probably a little over, or about 2 years ago, that increased the amount of federal funding in the U.S. that goes towards infrastructure spending. So for us, it should be a tailwind to the business. Again, more money in the system allows the states to plan more significant and more long-term projects. We expected the money to start to have an impact last year, but like a lot of other companies in this space, the money has taken longer than expected to flow through to the state level and to get implemented into projects. But we did, I would say, probably starting in the third and fourth quarter of our last year's fiscal year, start to see the impact of that. We do expect to have more of an impact in 2024 and see growth in our infrastructure business in the U.S. as a result of that. But this is a 5-year program, so this should provide stable growth opportunities for us for the next 4 or 5 years.
Great. Thanks for that background. You mentioned the road zipper. You know, we all love the road zipper, Lindsay's flagship product to lift and reconfigure barriers in real time, you know, given its unique ability to help on our own commutes. I believe you enhanced the sales strategy a year ago. What are you seeing in terms of opportunities for that solution?
Yeah, and maybe just quick audience participation. Has anybody heard of the Road Zipper before? Yeah, a few people, but has been one of our challenges, is that we're the only company that has this unique offering. We produce the machine and barrier. It's barrier that's all linked together that really allows for flexible roadways, and it's a very unique, high value offering for us, high margin offering, and we are seeing, again, back to the additional federal funding in the U.S., where going back a few years, we really changed our commercial approach there, and it used to be solving an existing problem, where maybe it's too much congestion on a bridge, the flow traffic going into the city in the morning and reversing in the afternoon. So it was more of a technical sale, engineer to an engineer in a lot of cases. What we did a few years back, we implemented a strategy we called Shift Left. We wanted to get have a seat at the table when a state or government is planning a large construction program, because Road Zipper can be used in a lot of different ways. And so what we're seeing the benefits of that now in our leasing business, which is really tied directly to road construction activity, where it's a temporary, maybe it's a 6 to 18 month kind of a project where Road Zipper can be used to accelerate the timing of a road construction project, but it also provides positive protection for workers in the work zone. And so, again, going back to last year in the third and fourth quarter, we started to see an increase in the leasing side of our business. We've got good line of sight to the upcoming construction season in the U.S. and feel like that's going to be a growing part of that business. The other side of the business, historically, it's been very project-oriented, large projects. That kind of got impacted, during the pandemic when, you had travel restrictions and government priorities kind of shifted during that time. We had started to see some pretty good traction there, and now we're starting to see that some of those large projects start to move through our sales funnel there. But it's a great business. It's got a lot of good growth potential. When you think about anywhere in the world where you've got heavy traffic congestion, it's an application for Road Zipper, and so
Great.
we're just
Very interesting.
the only ones out there trying to sell it, so that can be a bit of a challenge.
Sure. Great. Very interesting. I think we might have time for just one more quick question, if there are any in the audience. Right here.
Hi, Fernando here from Spain. Very interesting presentation. I have a question on the compensation policy that you have as a company to ensure that you are investing long-term for the value of the shareholders. So I wonder if you can share a bit about the policy for the management team in terms of your compensation.
The question was on the compensation policy and how that's aligned with shareholders for the long term. If you could talk a little bit about that in terms of...
Yeah, I'll take that. And so short-term incentive and long-term incentive. Short-term incentives are really going to be tied to revenue growth as well as operating margin. That was important to us a few years back when we felt like we had an opportunity to raise our operating margin floor. In a cyclical business, we wanted to, in the trough of the market, be able to raise our operating margin floor. On a long-term basis, really around return on invested capital is a major part of it. Total shareholder return has been incorporated as well. And then usually some other, personal objectives go along with that, but in general.
Great. Thanks so much. We are actually just running a couple of minutes behind schedule, so at this point, just want to thank you so much, Randy and Brian. Thank you so much on behalf of all of us at Gabelli for joining us here today. We really appreciate it. And we're going to take just a quick 10-minute break, so if everyone can be back in here 10 minutes, 11:20. We have the Value Investing panel coming up with Mario Gabelli and John Rogers. Thank you.
Thank you.